September is here and gold prices are up as the dollar and stock markets retreat on concerns over China. However, our next guest says it really is the Fed that is affecting the markets and they may want to reconsider raising rates. Peter Schiff, thank you for joining us on KITCO News.
Well, thanks for having me on. And I don't think the Fed ever really seriously considered raising rates in the first place. I think they wanted to create that impression. They wanted the markets to believe that rate hikes were under consideration because they want the markets to believe that the economic recovery is legitimate and that the economy can actually withstand the higher rates that they're pretending that they're ready to deliver. But I think it's all been part of a show to mask the fact that the Fed understands that all we have is a gigantic bubble, not a real recovery. And if they were to raise rates, they would prick that bubble. And that's the last thing they want to do, which is why all they do is talk about raising rates, but they haven't actually followed through on any of that talk.
Well, we'll look at the Fed a little closer in a second, but I really wanted to start by looking at gold, which is seeing some strength this Tuesday as the dollar is struggling. And last time we spoke, you mentioned gold was on a launch pad about to skyrocket. Peter, how much longer do we have to wait here?
Yeah, I think the launch pad metaphor is a good one because a lot of people have been using that metaphor to describe liftoff of monetary policy. When is the Fed going to finally raise interest rates? And of course, it was always thought that it would happen when the economy had reached escape velocity, meaning that the economy was now so strong, it no longer needed the support of the Fed, and so the Fed could withdraw that support. But that can't happen. The only thing supporting the phony economy and the markets is the Fed. And if you take away those supports, we don't have escape velocity. The rocket comes crashing back down to the launch pad. And so I think when people realize that we're never going to reach escape velocity, that there is no liftoff from the Fed, that's when the gold rocket ship will really take off, because now traders will realize that we're not going to get higher rates, that the Fed is not finished printing money. They're only getting started. QE4 is going to come, and it's going to be bigger than QE3, 2 and 1, and that's going to provide all the fuel that the gold rocket ship needs to lift off, and I think it's going to be pretty spectacular. And if you're not on board when it happens, I think you're going to miss it.
So, Peter, you really do think it's the Fed and the U.S. dollar driving gold right now?
Oh, absolutely. It's the strength of the dollar and the anticipation of future strength in the dollar, because so many people misunderstand the true strength of the U.S. economy. They don't understand that it's a bubble, not a recovery, and they have misinterpreted what they believe the Fed is going to do. They think the Fed is going to be raising rates, shrinking its balance sheet. That is not what it's going to be doing. It's going to be expanding its balance sheet faster than ever before. It's going to be holding interest rates at zero as long as it can.
So, Peter, do you think it's too late for Yellen to reconsider raising rates?
No, again, I don't think they're really considering it. I think that's part of the bluff. I think they know that if they raise rates, everything is going to collapse, and then they'll have to cut rates back to zero and look like complete fools. I guess they can look like less of a fool if they just leave rates at zero the entire time, because I think even if they do that, even if they leave rates at zero, the U.S. economy is going back to recession, and they're going to have to launch QE4. Or that's what they're going to do. Right. But at least then they can claim that they were correct to be cautious, that they didn't want to jump too quickly. If they actually raise rates and then the economy goes into recession, they could be blamed for that recession. And if they have to quickly reverse course, they really look inept in their policy, and they lose whatever credibility they have left, which is why I think it would be very risky from the Fed's perspective to actually deliver on the promised rate hike. Instead, they can hide behind the fact that they never actually committed to raising rates. They always said that they were dependent on the data, but they never really defined what that data was. So it can really mean whatever they want. And so they can make any excuses not to raise rates because they have never actually committed to doing so. It's just the markets that have made that assumption. The Fed has not gone out of its way to correct that assumption, but I think that's by design.
Well, Peter, I had one guest on yesterday who said that the Fed has no choice but to raise rates, even though the timing is horrible, but they need to do so in the eventual course that they have to do QE4.
Well, but why would they want to raise rates now? Because if they're going to do QE4, before they launch QE4, they'd have to cut rates back to zero. I mean, what's the point of raising them from 0 to 0.25 if your next move is to bring them back down from 0.25 to 0? I think the Fed looks even more foolish and more inept if they were to do that, because they would basically be admitting that they made a mistake. And the markets might actually blame the Fed for raising rates too quickly and causing the recession. I think the best course of action for the Fed is to just stand tight and keep making excuses. But of course, the best thing for the economy is for the Fed to raise interest rates substantially, call an end to QE, and allow the bubble to collapse, allow the financial crisis that they interrupted to finish. And unfortunately, the problems are much bigger today than they were in 2008, thanks to the Fed. So we have a much greater financial crisis in our future if the Fed does the right thing than the one that everybody thinks they saved us from in the past.
Peter, thanks so much for joining us today.
Hey, anytime.
And thanks for watching this edition of KITCO News. We'll see you tomorrow.